Let's see here. All right, can you guys see my screen?
We good.
Okay, perfect, perfect. So we'll keep it going. So let's see, move this around a bit. So just looking at this area here, at the lowest point to the highest point, or I like to look at it from 1 to 2 and into the future. What I do is I'll take my trend line, I'll draw from the lowest point to the highest point, I'll draw it out into the future. As you can see, price has broke this area, so this wouldn't be a solid area. So then we kind of just keep it moving to another zone. So let's look at this point to this point into the future, and that's looking much more solid, right? Because we have price uptrending still from here to here to here to here, right? And it's respecting those levels. If we were to draw from here to here, you know, price is no longer in that zone. If we were to draw from here to here, price isn't in that zone. From here to here, it's not in that zone. But this kind of gives us a zone, and this is still uptrending to us. Now, price is not at the weekly level no more. So, you know, we just want to be mindful of that. And then on top of that, we got the Great Britain pound, Japanese yen. Just keep in mind that, you know, we're not going to see a lot of activity on the pound, you know, this tomorrow simply because the banks are, as you can see, closed. So the euro, Great Britain pound, bank holiday. So there's not going to be too much action. Not to mention JPY, that has news that's going to drop on Wednesday. So we also want to be very mindful of that as well. Hold up. Make sure everybody gets back in. All right. Okay, so we know that's taking place there. So, but we can still look at this in the back test because we see a lot of troughs. So we see a lot of these ups and downs taking place in these areas. So what we want to do, you know, simply just draw out these areas. Boom, let's draw out another area. Boom, let's draw out one more area. Let's see something here. I took a fib tool from here to here. Didn't need to.
We're back.
So we'll use these two areas right there. Okay. So right now we're looking at the 4 hour, and as you can see, it's very clear, the charts, right? And as we kind of dip down into like the 1 hour, it starts to get messier and messier and messier. Why? Because there's a lot more data being seen on the actual screen. You go to a higher time frame, like a weekly, as you can see, it's clear as day. You can pretty much tell what direction the market is moving. From a weekly standpoint, we see this. The market is moving down, right? It hit this floor. Now price is starting to come up, essentially, but it's still at a low point compared to these other prices. Now, if we wanted to be a little bit more technical, we could draw from here to here, crush it through there, and see what takes place. You know, look at the daily, see how price is respecting that area. All right. So as you can see, price really isn't respecting that here. So it's not relative. Okay. What is relative is this uptrend, as well as this double top, really a triple top, because we got a top right here, we have a top here, we have a top here. Now price has hit this line, right? Now, if we see some type of bullish engulfing on this candle here, meaning that this candle shoots up, we know that price is respecting this line. We have a bullish engulfing here. You know, here we didn't have a bullish engulfing, but price did respect this area. You could have took some type of entry above this zone here. Okay. Same thing here, but we have more of a 3 inside up. So pretty much a large red candle followed by 2 green candles, bullish candles. We had a little pattern here, so another variation pattern, large right candle followed by two bullish candles. So pretty much price is respecting this area, and it's letting you know that price people are pushing the price back up. They don't want it to fall below it. You got these wicks on the downside pushing price up. You have all of these wicks pushing price up, pushing price up. So we know that from a 4-hour standpoint that all right, price is respecting, and we want to see upward motion. With us knowing that, if we were to take some type of entry above this wick here to the upside, there's 138 potential. Now, we're not looking to secure all of that. We might be risking, 50 pips, 30, 20 pips to the downside, maybe like 30 pips using this level right here as a lowest point. If we go a little bit below that, let's say about 35 pips downside, because this is the lowest point and we want to kind of come down a little bit below. So we're looking at 35 pips of the downside. We want to secure anywhere from 60 to 70 pips of upside motion. So 70 pips would be about right there. It's just solid trade. All right. So, but that's for price action now. We want to back test, right? So let's go ahead and look at the 1 hour, see what's going on in this area here. All right. The price is very messy, but if we were to take the brush tool, right, and just draw it out, we see this. We see lower low, lower high, lower low, lower high, lower low, a high, higher low. We still got a lower high, we got a higher low, we got a higher high, higher low. So we have that market structure taking place there, right? So what we're looking at is the real direction of the market. So this is on a 1 hour. So we know that in this area here, price is turning and it's getting ready to come back up, right? From the 1 hour perspective. But we don't want to trade that. That's not giving us a clear entry point. So we want to come down to a 30-minute to see if we can find something even more cleaner with an entry point, right? So as you can see here, I see something right here. Let me show you something. At the lower low, lower high, lower low, lower high. And it's not a clear, you don't have to necessarily look at all of these troughs because this is consolidation. What you want to look at is, all right, the peaks and the valleys. What are we looking at when it comes to peaks and valleys? So from this point, we had this low, right? And we had this a lower high, but then we had a higher low right here. Now at this point, price broke this structure. And this would have been your clear area of jumping in the trade. And you could have used a Fibonacci tool, the 15-minute level, to gauge it. You could have gauged at 61 level, which is about right here, right? Or if the wick was too high for you, here, and you would have seen this. You would have seen price playing around this 38 to 50 level, and it's not breaking below this 61.8. You have these wicks, of course, but this is just letting you know that the bulls are, in control, and they're pushing price back up. They're pushing it back up. So you could have simply took some type of trade right around this area when you saw one of these patterns, a bullish engulfing, another bullish engulfing, morning star right here. Simply a large red candle followed by this doji candle, followed by a large bullish green candle, pushing price up to the upside. Now, using that idea of taking that trade right around this area here, with all this mess, you're risking, you got to keep in mind, like, you can set it and forget it. Literally, set it and forget it. Once you start to see this forming and this happens here, and you were to take a trade somewhere up here, you can set it and forget it. Like, downside motion, you're looking at about, 45 to about 50 pips. Let's say 50 pips total, right? And your account size is $500. $500 in your account. And you're only risking 10, 10%. 10% means that with a 50 pip risk, you can only trade a 0.1 lot size. Because if it goes down 50 pips on you, and $1 per pip, you're gonna be stopped out at $50 loss. Right? So,
Vanilla.
yo, what's good?
Trading group.
Huh?
Sorry. I'm just saying.
Naquan, you talking to someone? You talking to me?
Oh, my bad. I didn't even know I was on the thing.
Yeah.
My bad.
No, you're good. Just mute yourself, boss. You're good. So, knowing that there, 50 pips of downward motion, right? We want to look for some type of a 2-to-1 leverage, right? So we want at least 100 pips of upside motion. Now, 100 pips, that's a lot to be, trying to grasp. So anywhere between knowing that the British pound and the Japanese yen moves a certain amount. So let's look at it on the Forex volatility calculator. Right here it says 67 pips, right? So knowing that, it could be a 1-to-1. This might not even be a good trade setup. You might look at it like, you know what, because it says that it only moves 50 pips or 60 pips, this is a 1-to-1. It's not really working in my favor. But if you were to take it, you have your 50 pips that were met within a day. 100 pips was met within like a day and a half. And if you were just riding the wave to just ride it as far as it would go, you're looking at 178 pips within 1 day and 20 hours. So pretty much 2 days, you're gaining about 200 pips, which is a solid trade. All right. And you could use this level right here as some type of foundation. Why? Because price came to that point, it dropped below it, it respected this line. So what is price typically going to do? It's either going to come back and retest this area or one of these highs, right? Or it's going to come up to this weekly level. If you're looking at these highs, right, let's look at the most recent high. This wouldn't be the most recent one. This would be the most recent one, right? If you're looking at the most recent high, and you were to take some type of trade about right here. This recent high is about 73 pips, okay, if you're gauging that. This high is 122 pips. This high, 158 pips of upward motion. And you're talking about jumping in right here. So after all this commotion, price started to come up, you're looking at jumping in right around this area here, okay? That's a solid trade. Let's see here. All right, so let's look at that other area that we marked. Still on a 15-minute. And this one right here, this is clear as day. When you see something like this should be just a telltale sign to just jump in the trade. And I'm going to tell you why. Because if you look at this, we have price falling off this cliff. Lower low, lower high, lower low, lower high, lower low, lower high, a lower low, a high, higher low, and then we have this high. But look right here. Look what happens right in this area. This is an inverted head and shoulder. We have a shoulder, the head, and then another shoulder, meaning that this is a low, got a lower low, and then a higher low. Typically what follows that other higher low is the trend continuation in that direction. And if this was flipped the other direction, where it would be on this side, then you're looking more at price come up, come down, gets up a bit higher, comes down, makes another shoulder, and then falls down in that direction, right? So price was first coming up here in this direction, did this, and now it's falling and it's coming down in that direction. And the same thing happened on this downside here. This is on the 30-minute, right? So we haven't even looked at 15-minute to see if there's any type of market structure that we can find on the 15-minute. So you could have used that as a gauge. You could have used trend lines as a gauge. Let's say you would have, place your trend lines. You could have done something like that, follow this, and then once you saw price break, retest, you could have took some type of trade up there, risking. Let's say you were to wait. You would have saw all of this here, right? And you're risking down here. You were to get in a trade up here, you're looking at about 84 pips to downside. Now, I wouldn't recommend taking the trade just wild open like this, because simply, there's no real gauge. There's no real market structure that you're looking at. You're looking at a break of a trend, yes, which is perfectly fine, okay? But you don't know how far down it's going to go, and you don't know how far up it's going to go. Right now, it only touched about 30 pips. For most of you guys, some of you guys will close at 30 pips. You know, a lot of you guys will want at least 50, 50, 60 pips just to kind of grab it. Starting out, you want to grow your account. If your account is below $1,000, below $2,000, $5,000, like your main goal is to grow that account, to an area where you can comfortably, cushion these 80, 100 pip drawdowns, to gain 100, 200 pips, 300 pips in 15 hours. This is wild. And this would have been a solid level to sell at. If you were just riding this wave up and you saw price was coming at this level, this weekly key level, you could simply just put a sell there and forget it, knowing that price is going to respect this somewhere in this area. Price is going to respect it, right? Simply because it's an area of significance. Price won't break above it. It won't break above it until, some type of major news comes, or it touched it so many times and stayed around that area for so long. You saw consolidation right at that area, then there may be potential for it to break above it. But let's look at the 15 minutes, see what happens at the 15. Let's see if I can zoom that. Where we at? Ready? This should be right here. Yep, so this is the area that we were just looking at. Same situation. We have the lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We had a high, higher low, and we had this uptrend taking place, right? So we have right here, same thing, a little shoulder, another shoulder, and then we have a head taking place right in that area, right there, right? So you could gauge your trade off of that. You could look at, okay, knowing that this was an area of support, let's draw that line because that's the last area of support. No, once price breaks above this high right here and it starts to move up, then you want to look at areas of support from previous, time frames or previous time to see if price is going to retrace back down. Because what happens is price always retraces back down. If you're using fib, I could tell you that this is probably anywhere from 50 to 68 retracement. From here to here, price came down to the 68. The wicks came right down to the 68. And guess what the 68 is also at? It's also at this area of support. So that's two confluences, right? We got this area of support. We got price getting bunched up at this 68. And then if you zoom in closer, look at this pattern. A morning star. We have this large red candle followed by a doji candle, followed by a large green candle, bullish candle, meaning that price is going to the upside. So you can literally take a trade after this candle, right? Somewhere in this candle here, let's say you take it about right there, your drawdown, you're looking at about 61 pips. So let's bring that down a bit more. About 70 pips of drawdown, right? So if you're looking at 70 pips of drawdown, you want to at least double that of upside. So to double that of upside, you're looking at about 140 pips. But because, we're not shooting home runs, at least try to secure, 50 to 60, upwards to maybe 100 pips if you can get it. Or you could take two trades, a twin trade, where one of them locks in at 30 pips, and then the other one just runs. You let it run. Once you see price break above a certain area, maybe this is the area, move your stop loss above the entry level, right? So that if price does come back down, you still come out with a gain, and just let that trade just run as far as it can run and just close it out when you feel comfortable, because you got two trades open and one of them closes securing profits and the other trade stop loss is above your entry point. You're pretty much comfortable because even if it closes, you still gain on that trade. But in this case, you're looking at 214 pips if you were to ride it all the way to the top. And that could equate to, you know, $1,000, $2,000, $200, $400, just depending on how big your account size is and how much your lot sizes are when placing this trade. So before moving on, do you guys have any questions about back testing? All right, cool. So let's keep it going. So it's just a few, strategies, or just a strategy that I recommend studying over and over again, just to kind of gauge, like what the market does, like on a lower time frame in these troughs, because you want to be mindful that, this is a dip. This is just a retracement to an upward movement. When you're looking at the 4-hour, or when you're looking at the, the dailies, all we're doing is just looking at a dip. It's simply what happens here to this side here. So instead of just looking at this large time frame and saying, okay, price comes down here, we're literally just looking at these few candles in this area here to see how price reacts, right? Once we find it, that entry point, you take it, and it's pretty much a solid entry, all right? So now let's go ahead and jump into support and resistance, because I don't want this call to run too long. So I know a lot of people have questions about support and resistance. Which pair do you guys want to look at? Any pair. Name a pair. I'm about to call on somebody. Let's see who's here.
What are you saying?
This pair is good.
What's that?
I was saying this pair good.
This pair right here? All right, cool. So right now I have all my levels drawn up, but I'm going to go ahead and erase these levels so we can start fresh. All right. So right now, say you're just looking at the 1 hour, okay? So we're looking at just a fresh chart. Nothing's here. It's just a completely fresh chart. All right. The first thing you want to do when looking at this, right? If this is a pair of you saying, you're telling yourself, all right, I want to trade this week, right? First things first, before doing anything on the chart, you always want to look to see if there's news dropping for that pair. All right. We looked at this. We know that tomorrow's a bank holiday. We know that the Japanese yen has news dropping on Wednesday, right? Great Britain pound, does it have any type of news, catastrophic news that's dropping this week? No. So this would be a solid pair. Like Great Britain pound would be a solid currency to actually trade, knowing that it doesn't have any crazy news. The only thing is the Japanese yen does have news. So we have to be mindful of that, because if this is good news, the Great Britain pound is going down. Even if we're looking at it to continue to go up, it will come down simply because of the news of the Japanese yen. So knowing that, now we can come back to the charts and actually mark it up correctly. So we're not looking at the 1 hour. We're not looking at 2, 3, 4, or the daily. We're looking at the weekly first, right? Because this is where we get our key levels, the key levels on a weekly time frame, which is very, very powerful information. So we come here, we look at the line charts, and we just look at these large drops. We're not looking at every single, tick that the chart makes. We're looking at these large drops, because these large drops, if you were to measure it from one drop to the next point, we're looking at 1,093 pips in 28 days. Pretty much in 1 month, this thing moved 1,000 pips, right? That's a key level right there. That's, well, not key level, but that's like a key point to be mindful of, something like this right here. So we want to grab our horizontal tool, okay? And we want to just draw levels relative to where price is. We don't want to look way up here, because if you think about it, price from here to where price is actually at, that's pretty much 5,000 pips. There is no way in hell this is moving 5,000 pips within 1 month. So looking up here is just, it's irrelevant. You're doing extra work that's unnecessary. You want to look in this area right here, where price has been, the price is playing around, right? For the past year and a half, price has been in this area. So let's grab a horizontal tool. Let's look at the lower side first. So I want to mark this area right here. Let's move a little bit further down. Boom. Right. Reason why we're marking that up, we have a gap, price gap, price gapped, price tapped. We have a gap, we have a gap, we have a price tapping there, price tapping there. We have some gaps, some taps. All right. So what that means, because price was tapping and gapping on both the top and the bottom side, this is a key level. This is a very, very, very strong level on a weekly time frame. Let's go ahead and put that asterisk to let us know that. And then outside of that, if we were to go a little bit lower, we can look at that there. We got that touch. You know, we got some overlaps and taps over here. We have some activity there. So we can say that that's another weekly key level because, you know, it was met as support and resistance on both sides, right? But support and resistance below price. But right now, these two lines are considered support. Why? Because they're below price. So price comes here, it's support. If it breaks below it, it's now resistance. If it comes down to this level, it's support. If it breaks below it, it's now resistance. Okay? So we're looking at those two levels. And then let's see what we have on the top side. So on the top side, we have, boom, we have that taking place, right? We have a tap, we have another tap, we have some taps, we have a gap right there, we have some taps, some overlap, some more overlapping and tapping taking place. So, okay, that's a key level to us because price was tapping on both ends and gapping on both sides. So knowing that, it's relatively an area that is of importance. We want to draw that as a weekly level, right? So now we have those levels, and then we want to mark up one more zone that I could see right here. So I hit this right here, right? We have some taps, some overlaps, you know, some more taps. We all have all of that taking place right there. We have a little gap, a tap right there. You know, we have some consolidation. So these are 4 levels that I could say are all key because price is touching it on both sides, both the top and the bottom. So we'll leave that. And then we come here to the candlesticks, and we just look at how price plays around these areas. Wicks, more wicks, consolidation. See what I'm saying? Price is respecting it, you know, coming above it, respecting it from the top side. Same here, price breaks above, falls back down. Price comes up here, it's falling. So you're seeing what price is doing at these levels, right? So when price comes to this level again, you look in the past and you see how price reacted to that level. If it came up to it and fell, 9 times out of 10, price is going to come back up to it and fall. But you want to just wait for the confirmation that that's exactly what's taking place, right? When you just look at support and resistance on a 4-hour, 1-hour, 2-hour time frame, price doesn't work in your favor because, you know, although you have past history to kind of gauge, sometimes it just doesn't do exactly what you wanted to do. It just doesn't. On these time frames, it pretty much does with the, you know, the exception of things like this. But remember what I said. You're waiting to see what happens at this level. You see something like this evening star, you don't have to worry about, you know, oh, should I take the trade and, you know, am I going to be clear? Because you could really take the trade at the, you know, the open of the next candle because you saw this formation and you know that this is going to take place because what? You had this bearish engulfing here, right? Price came down. And you have past history to let you know that, okay, price did fall back down once I got to that zone. Next time it does it, price fall back down once it got to that zone. Next time you're looking at it, you want to see price fall back down. Did we see that? No, we had one bullish candle just break straight through 2 weekly levels, right? And then come back and retest it. And instead of breaking through it, it stopped twice. And it was like, okay, we're going to respect this level and we're just going to shoot up, right? So that's what we're seeing from past history. So we got the weekly marked up. Now let's look at the daily. Now before we move along, does anyone have any questions? All right, so let's keep it going. So let's look at the line chart once again. Horizontal tool, let's just draw areas. So just remember, we're looking for areas where price shot down and then turned around. Think of support and resistance, also like turbulence on the airplane, right? So if you're on the airplane, okay, and then you hit a big bump of turbulence, you will remember that. There is no bypassing that. You will remember that. It will have you gripping your seat. It will have you alert. If you were sleeping, you will wake up. It will have you on edge. You know, so when looking at support and resistance, look at these big moves. These big moves is what matters the most. Not these small little, you know, shakes here and there. That doesn't matter anything, you know, when it comes to price. We want to look at the big move. So for us, let's mark up right here. Why are we marking up there? Because price came down, went back up. We have a tap. We have this taking place. We have another overlap. Price came up to it, came down to it, went right back up. There's some consolidation. So let's change the color too to make sure that we don't mix it up with our weekly. Change that to magenta. We'll look at the daily level. Okay. We have that taking place. So that's support. So we'll leave that there. And then at the top side, let's see what we can find. I see this right here. I see a double top. I see another tap. I see this drop and then reversal. I see some overlapping taking place. So that's a solid daily level. All right. It's a solid daily. Let's add an asterisk on this because this is a key level. Price touched on both sides. All right. So now we look at the candles. All right. So we see that price has, you know, wick from the top, wick from the bottom. We see this morning star. We see a bullish, a bearish engulfing, another bearish engulfing at that level. So we're seeing some good, you know, chart patterns on a daily. Now let's look at trend lines because trend lines is also important. We then drew up our support and resistance from both sides. Now let's see what price is doing from the bottom or the top. On a daily level, we got price doing this. Boom. Price came here, came up, respected this area, it's playing around it. Now price is right here. What we're looking for is to see what price is going to do at this trend line. Because price will do something at this trend line. Will it respect it and go up? So are we looking for this? Or will it come to this area and come down, right? But one thing's for certain, if price does come here and goes up, it's going up. If price comes down, we're going to see this downward motion and then a retest before it actually breaks down. So price won't just shoot straight down. It normally comes down a little bit, retest this area. It might not come back to this line. It might come just below this area here. So we're looking at about, let's say, about right in this area. Price might come, retest it, and then fall if it breaks this trend line, right? And if it breaks that trend line, what we're looking for is areas of previous support to, you know, close our trade. So this area is a previous support, and down here, at 61 pips. That's a solid trade. If we're not looking there, guess what we're looking at? We're not looking anywhere past this daily level. This daily level is last locking all your gains. Why? Because this is a key level. Price is going to come down here and it's going to go back up 9 times out of 10. Unless you see some type of bearish candle that just rips through this level, price is going to come down here and it's going to be met by a ton of buyers. I could guarantee you there's a bunch of buy orders right now that are at this daily key level, right in this zone. People just have it, just waiting for price to come down here. Why? Because price always comes down, goes up, down, goes up, down, goes up. Right? So that's what we're looking for. And then we look at lower time frames, like the 1 hour perspective. You know, we see the uptrend take place, we see a double top, and then now prices fall. So, like I said, we're literally just waiting to see this week what's going to take place. The British pound is on a bank holiday, so we're just sitting tight to watch this. It might happen this week, later this week. It might happen next week. But as we sit tight and we just watch to see what goes on, this will tell us exactly which way you should be biased. If prices, if it holds around this area here, then we can see some type of upward motion. But if we do see upward motion, we're looking for some type of candlestick pattern that looks like this. A bullish engulfing, where it's a small red followed by a large green, or even a morning star, where it's a large red candle followed by a doji, followed by a large green candle, letting us know that, the trend is in an upward direction, right in this area. And if it happens here, there's a confluence. Support from previous market structure may take place. The trend line also, just from the past history in an upward direction. And then we could also look at the fib to see if it's a fib level that we're at, right? Right here, it's not necessarily a fib level, but we have this 786 that if it could hold above the 786, that should give us some solid indication that price might move in the upward direction. Right now, it broke below the 618, so we may be looking at some type of bearish movement a little bit further to the downside, right? But we want to see what happens at this level here. Will it break, fall, or will it hold, and then retrace back to the upside? Okay. Let's see here. Now, with all that being said, any of you guys have any questions? Because I know this is going to kick us out in 3 minutes. I want to make sure I answer some questions. I know you guys have to have some questions. Talk to me. Janae, is this making sense?
Hello?
Yo, can you hear me?
Yeah. So quick question. Jumping back to the Forex factory. So are you insinuating that before we jump into any trade, pretty much like we need to scan to make sure that we don't make any moves until we watch what happens, and then in about 10 or 15 minutes after that we will gauge if we need to jump into that trade.
Exactly. Sometimes it might be even sooner. Sometimes it might be like on the minute, a couple minutes afterwards, 5 minutes afterwards. But just you would want to watch it. So if you know that something is dropping on Tuesday on the Australian dollar at 9:30 p.m., tune in at 9:30 p.m. just to see, all right, news hits, is it as they expected? Did it hit the 0.2 to 0.4, or was it better, or was it less, right? If it's less, look at the charts. The price should fall down because price or their what they thought did not happen based on these numbers here. So if their numbers was 0.2, 0.4, and it was 0.1, 0.3, that's less than what they expected, meaning that it came up negative. So price should move in a negative manner as far as Australian dollar goes. But sometimes, price may show up negative, but price moves in a positive direction. That's why I'm like, never jump in a trade anticipating a certain move, because you can be on the wrong side of the move, and literally it'll just go against you 200, 300 pips, and you just don't want to get caught up in that. You don't want to get caught up in that.
Got it. Okay.
You know what I'm saying? So it looks like we got about like a minute left. I just want to tell you guys something real quick. So, and then in this upcoming week, I'm putting together an Excel spreadsheet. I want to do what is called a 50 trade challenge, where, if you're trading your real money, then, perfectly fine. If you're trading a demo account, let's do that there. But I want you guys to analyze 50 charts and take 50 trades. And after these 50 trades, it should give you a indication of where you stand when it comes to understanding these charts. So if you were able to, win 25 of 25 and you were profitable at the end of these 50 trades, you're pretty much solid and you should be able to go into real money. But if you took these 50 trades and you lost, let's say 40 and you won 10 and you lost money, we got to keep going at these charts on the demo system. So I really want to do this. I'm going to be dropping some info within the chat, regarding this. And once the Excel spreadsheet is put together with the formula,